Brent, and welcome back to the Trading Couch. We're talking about Bitcoin. Our Clarity Spotlight last week, we're going to run through a big picture, multi-cycle chart, the current weekly roadmap, and then zoom into a daily and look at this fatal shakeout from the price behavior we've seen over the past few weeks. It was really our theme for our Clarity Spotlight this week about why these fatal shakeouts or terminal shakeouts occur, what Wall Street and institutions are looking to accomplish when they do that, and how Bitcoin has responded in the past and previous cycles whenever we saw a terminal or a fatal shakeout develop. Before we get into that, quick disclaimer. This is educational content only. All of our content and all of our videos should not be considered investment advice. Trading involves risk. Always do your own due diligence and trade based on your plan and your own risk tolerance. If we take a look at this long-term view of Bitcoin, we see multiple decades of boom and bust cycles on a logarithmic scale here. We are long Bitcoin, have been long Bitcoin. And one of the things that we've noticed through all of these cycles in these boom and bust periods is whenever there's a big pullback or a big downturn in Bitcoin throughout the years, it has landed and ended up on this multi-decade support line that is really the backbone of the Bitcoin cycles, dating back, and I could extend this line down into 2013 here. So dating back into 2013. So across multiple decades, whenever Bitcoin had a big pullback or a big drawdown, it found support at this level. And we can see examples of these fatal shakeouts or these big sharp pullbacks that hit this line that end up producing these big runs in Bitcoin and these big upticks in Bitcoin that we've commented before, we have not seen in this cycle. So far in this cycle, Bitcoin has grinded along this all-time support line. We have not seen the big extension yet, although we do see our exponential moving averages, our EMAs lined up here and supporting price. What we believe has happened is there's this little reaccumulation structure that has developed, taking profit out of this impulsive wave structure that formed from the lows in 2022 and 2023. Before we move on, a couple of things to point out, other than the fatal shakeouts that lead to these big cycles or these big extensions away from the backbone or all-time support line. The other thing that we see other than the shakeouts is this long-term bullish divergence developing where the bottoms of price don't match up with the bottoms of the momentum indicator, which in this case is relative strength index. Whenever price is advancing and the relative strength index is falling, that is bullish or positive divergence in demand greater than supply conditions are taking hold. And if we look, we can see that we've got bullish divergence that has developed dating back into 2023 here as Bitcoin has grinded higher. The second thing to point out is that we don't have a big top heavy volume profile here. So if we had a big volume shelf like that stuck out here, that was really flat and stuck out, showing big volumes or lots of transactions occurring here, that would indicate that stronger hands were unloading their shares onto weaker hands, or institutional distribution would be happening where Wall Street would be taking all of their profits and dumping the asset. But we don't see that happening here. This is just trend processing. This is a pullback, back testing, this reaccumulation structure. We don't see anything representing heavy selling. We don't see distribution here. This is not a secular breakdown. This is a campaign test of this EMA band and this rising support line here. So all of this looks to set up a bullish environment for Bitcoin. If we look at the weekly chart with our Fibonacci roadmaps here and our Elliott Wave count, we can see that Bitcoin has gone through this fatal or terminal shakeout, hitting this all-time demand line, very similar to the bottom of wave 2 in this cycle, where we hit a sharp pullback, touching this demand line that ended up producing this big impulsive wave structure that is now the profit that is being taken by Wall Street when it has formed this reaccumulation structure that I'll walk through in a little more detail when we get to the daily chart. Here's our long-term bullish divergence. I could stretch that back even further into 2023, but the commonalities or the similarities between this price behavior at the end of a corrective or a reaccumulation structure really speaks for itself. This sets up really nicely for what could be a bottom of the a channel to the top of the channel move. We talked about the changes in economic policy happening at the end of the month. Quantitative tightening is ending. It is widely expected that quantitative easing is going to start in January. So all it's going to take is a mention of quantitative easing kicking in January for all of the risk assets, including Bitcoin, to react. We do see another rate cut and monetary policy easing. It's quite easy to see a potential upswing in Bitcoin. We see a Fibonacci cluster right here. If we measure this pullback, we get a 272 at 178. We'd measure this pullback here, we get a 1618 at 173, 174. That has been our target for quite some time. We think this may be the pullback leading into that extension and into the next phase of this cycle, which should be another impulsive wave structure for wave 5. If we now jump over into a daily chart, let's zoom in and take a look at this reaccumulation structure. First thing that jumps out at this chart is obviously this fatal shakeout here, this terminal shakeout, leading into a 219% impulsive wave structure forming. Not suggesting that it's going to do the same thing, but it has all of the similar characteristics, undercutting a reaccumulation range and then extending up off of that shakeout and moving up into another profit-taking periods. We are very late in this cycle. We do think this is reaccumulation. We get an up thrust after a buying climax and a secondary test and sign of weakness. Although the spring did not come down and undercut this structure, it doesn't have to. By definition, a spring's going to come down until demand greater than supply conditions take hold. We can see rising volumes. We can see bullish divergence. We saw a long wick form on the candles. And it's Monday. We have seen some upward movement out of this rate. All of the classic signs of reaccumulation that occurs when profit is taken from the previous run. If you can see this obvious impulsive structure, profit taking is now reset, and we look for the next impulsive structure to be built out. As I mentioned, we are long Bitcoin. We do have some other long exposures in the crypto space. We'll be watching this very closely. Everything does point to a temporary pullback. Institutions are looking to push weak hands out of the trade during pullbacks, during shakeouts. Shares and or coins are being transferred from weaker hands to stronger hands. During distribution, when profit is being taken, you could expect to hear good news in the headlines. They want people to feel good about buying Bitcoin at this point because that's when Wall Street is selling it. That's when coins transfer from strong hands to weak hands, and then they dump supply onto the market and have those weak hands then sell those same coins back to them at a much lower price. That's the Wall Street business cycle. That's how they conduct business. Our job here is not to try to guess what the next candle is going to bring. Our job is to read the institutional cycle, identify where Wall Street is placing their money, and align our assets with their assets so that our assets can benefit from their business cycle and hopefully this next impulsive structure that forms here. I hope everybody enjoyed clarity last week. Our Black Friday sale is going on. If you'd like to take advantage of that, the coupon code is all caps Black Friday. Enter that at the checkout screen. If you are an annual subscriber already, reach out to us. The coupons are intended for new subscribers. So if you're a current subscriber, probably best to reach us at contact@tradetherapyllc.com. I hope everybody enjoyed the spotlight last week. That's all the time we've got for Bitcoin. We'll see you next week.